Thanks for staying with us here on the Savvy Investor radio show and podcast, here with Samantha Nash and Catherine Gross, financial planners at Prostatis Financial, ready to help you grow, keep, and distribute your wealth in the most tax-efficient manner possible. We get together with the ladies to learn about retirement and everything that we could do to give us the confidence that we need to do that. And a big part of that is taxes. And we are enjoying the lowest tax rates ever in our lifetime. And most of that is due to the Trump tax cuts passed back in 2017. Bad news is that those are set to expire at the end of the year 2025 if Congress does not act. So I want to play this clip. And this is from tax expert. He's known as the Roth tax expert, Ed Slott. He says he told Morningstar, a financial publication, that this is the opportune time for something that Samantha and Catherine have been talking about for a very, very long time here on the Savvy Investor radio show and podcast, and that is IRA to Roth conversions. Listen to this.
Remember, a lot of your IRA is a debt owed back to the government. Your IRA is an IOU to the IRS. Your IRA is a joint account with Uncle Sam. But here's the difference. With a regular joint account, you generally own half. You have a joint account with Uncle Sam where you don't know what his half will be. That's yet to be determined based on how much money the government needs at the time you take that money out. Now you do know what the rates are. You're in control.
How much the government needs when they need to take that money out. It's maddening. How do we prepare for that? But I love that. Do you guys agree that an IRA is an IOU to the IRS?
Absolutely. We're having a fire sale right now on Roth conversions.
Yeah. Why is that? Tell me about that.
Just we're in the lowest tax rates that we're probably going to ever see in our lifetime. If we look at there's a website, debtclock.org. Even if you just log in there and look at what the government's paying for just Medicare, Medicaid, defense and war, Social Security, interest on the debt, we're looking at $5.3 trillion already just to be spent on those necessary items. And basically, the government is a bad steward of our money. I like to joke, if most of us can agree that we have a sibling that's probably bad with money, right? So why would
we can.
Or parent.
Or parent. So
you guys have seen a lot. I would imagine.
I mean, I have one personally. Would you want to share a bank account with that sibling, knowing their track record? I wouldn't. I definitely wouldn't share a bank account with my brother.
You just called him out.
Yeah, I mean, I think he would agree. I'm sure he'd like to share one with me, but
getting personal here on the Savvy Investor. Personal.
Just a little bit. But yeah, I mean, the government has proven time and time again that they're a bad steward of our money. Whether, I'm an equal opportunity basher, just like Mike, whether you're a Republican or a Democrat, we can agree that there's tons of government spending that's done on unnecessary things. And basically, you can be in control now because you know what the tax rates are due to the Trump Tax Cuts and Jobs Act that are set to expire at the end of 2025, hence my idea of the fire sale.
Mike always says, act on what we know today. He says that over and over and over again. But it's true. There's a reason that he says it.
Yeah.
So when people are asking about the Roth conversion, and I'm listening right now, and I go and I start converting over to Roth.
Mm-hmm.
That's not a good idea either, because you don't want to just blindly start converting every account that you have over to a Roth.
No, and it's specific to your individual situation. It depends on how much your income is, what your tax bracket's now, what your tax bracket's going to be in retirement. So it's a very specific analyzation that we do of those numbers and then determine whether Roth conversions make sense for you or not. So if you're not working with a tax planner, which is different than a tax preparer, then you should definitely give our office a call, 866-597-1040. Sit down with Sam and myself. We'll do a Roth conversion analysis for you. We'll look at what your current tax rate is during the Trump Tax Cuts and Jobs Act. We'll look at what your tax rate is projected to be on what we know now once you're retired, and then we'll see what that wiggle room is, what makes sense to do a Roth conversion or not, and whether the juice is worth the squeeze there.
Again, that's 866-597-1040, 866-597-1040. You can also go online at thesavvyinvestorradio.com. That's thesavvyinvestorradio.com. Front page, click on the tax analysis button, and that will get you to their Calendly calendar page. And the cool thing about that is that you can look at their calendar and see how it's going to work with you. So if Tuesday at 9 o'clock is open for them and it's open for you, click, hit the button, and you're ready to go. Quick 15-minute phone conversations to see if these Roth conversions are going to be the way to go. And Samantha, I want to bring you in on this because the beauty of this, not only for the person making those Roth conversions, and again, correct me if I'm wrong here because I'm learning with the two of you, is that once you make these conversions, you don't have to pay tax on that money or the growth of that money anymore. And then the beautiful thing, and I also want to touch on this, so let's talk about what the benefit is for the person making the Roth, but also for the family members of the people, of those persons making those conversions.
Yeah, absolutely. So a Roth conversion or a Roth account in general is a great vehicle for your money. For the person that is contributing to it, the money grows tax-free. When you pull it out, you don't have to pay taxes on the growth. Now, when someone passes away, there's also a benefit to it as well. You look back at an IRA, if someone passes away, the beneficiary has 10 years to take all the funds out of the account. There also may be RMDs involved, and everything that's distributed from those funds are income taxable. So if you have $1 million account that you leave to your son and he has to take out, let's say, $100,000 every year, that's $100,000 added on to what his income is, which could put him into a higher tax bracket or even 2 tax brackets higher than he is already.
And the reality is most people inherit money from their parents when they're in their highest earning years of their career.
Correct.
Anyway, so I think the government was strategic in that.
No.
In that plan,
No.
most of us inherit money in our, 50s, 60s when our parents are in their 70s, 80s, 90s. Well, that's when we're earning the largest salaries we've ever made in our lifetimes. And then we're adding that additional IRA money as a distribution due to the Secure Act that was passed in 2020, putting us in the highest tax bracket, higher 1 or 2 tax brackets than we are now.
And that we all know is could be a massive game changer for your retirement. If you get kicked up 1 tax bracket and then sudden maybe you get kicked up to 2, that's a big deal for a lot of people.
Yeah,
Absolutely.
especially once the Trump tax rates sunset in 2026, those tax rates are, if they don't come up with the new legislation, those are going to, my thought is going to go up because of the interest in the deficit on the federal budget itself.
It also affects other things besides taxes like Medicare premium, IRMA. But to go back, the difference between an IRA and a Roth is that your beneficiary does not have that 10-year rule or an RMD that they have to take. When they get that money or when the beneficiary inherits that money, they have the ability to freely take it out with no required RMD. And additionally, it's tax-free.
I'm sure you guys have stories of people that come in, and you guys do this tax strategy analysis to see if a Roth conversion is or isn't the right thing for them to do. Is that a hard pill for people to swallow if you guys say, hey, let's do this Roth conversion now, but the benefits far outweigh, depending on every situation, because they're all different. Yeah. The benefits are far going to outweigh you in the future versus right now.
Right. So the benefit is there's a cost to it, right?
Mm-hmm.
So when we do this analysis, we'll look at, what we think you should do as far as Roth conversions based off of the current tax legislation now, what we know. And that's going to cost you money. You're going to pay more tax dollars over the next 5, 10, 15 years, depending on how we formulate this plan. But then we look at your overall lifetime tax bill. So we'll look at what your tax bill will be, say, from 65 to 95 if you do 0 tax planning at all. And then what your lifetime tax bill is projected to be from 65 to 95 if we become more tax efficient. And for some people, the juice isn't worth the squeeze. But for a lot of people, we can save them close to, $750,000 to $1 million in taxes by doing proper tax planning.
Wow. And I got to imagine, Samantha, a lot of people don't like to be told, because this is looking ahead into the future. If you're 73 and you have to start taking out those required minimum distributions, I don't want to take them out, but no, you have to, and that's why maybe doing this Roth thing now is a good thing for people.
Mhm.
Absolutely. And our software, we have a really cool software that will show you what's the difference between you not doing a Roth conversion and you doing a Roth conversion. And at the end of the chart, it gives you, again, it's not exact, again, because there's some people have years and years to live, but it gives you an idea of how it will affect your plan. We've seen people that are able to save $1 to $2 million at the end of their life just by doing these Roth conversions.
And then on top of that, that their kids save as well when they inherit the money, because they inherit the money tax-free as well. So sometimes, people will make the emotional decision to do Roth conversions, even if it doesn't make sense for them, but to do it for their kids.
Exactly. Legacy planning.
Mm-hmm.
So you just mentioned emotion, though. What you guys are proposing, there is no emotion in it. This is a totally third-party piece of software, basically. Is that correct?
Mm-hmm.
Yeah.
That's going to tell you, hey, here's A and here's B, and then you decide.
It basically tells you Uncle Sam's half of or share of your lifetime savings.
Unbelievable. And folks listening, they can do that right now. You can do that right now if you give us a call here on The Savvy Investor.